We're back for another update. In today's analysis, we're going to be taking a look at the US stock market, US oil, DXY, Bitcoin, and Bitcoin dominance. Just going to be giving you my overall views on the market, and we'll first start with the Dow Jones Industrial Average. As you guys can see, we have come up to these highs over here that were set in December of 2024 and February of 2025. And you have pretty much equal highs over here, in equal zone in which the prices come up to. However, transports is trending lower. So usually when you have this divergence with transports and the Dow, this is called the Dow theory. So when you get that divergence, it usually signals that the underlying strength is just not there in the economy. So although the market is rallying, when you have bearish divergence on transports, you usually see the move right after on the Dow. Okay, and that's exactly what we're seeing. We see equal highs over here, right? We came up to this zone, but we have consecutive lower highs on transport. So this is triple negative divergence. And what we see over here is price has gone into overbought territory on the daily RSI and the RSI multi-length indicator. Every time it flashes green, we actually form a top. We form a local top. Whether it's a major top or local top, we always flash green over here. And we flashed it on the daily. And this indicator is giving more of a bigger signal than it did back over here in January. Okay, so that's very significant, along with the RSI reaching into the overbought territory, and then the Bollinger Bandwidth indicator is also reaching into overbought territory. So the Bollinger Bandwidth indicator is very overheated, and if you look back over here, we went into overheated territory back in January, formed a little bit of divergence, and we're doing the same thing here in July. So we may see a little bit of a pullback on the Dow. I would be expecting a move back down to the 21 and 50-day moving average. So the 21-day moving average is sitting at 43,240. 50-day moving average is sitting at 42,366. So we may go a little bit higher, but overall, it does look like the Dow Jones is running out of steam here. When we take a look at the Nasdaq NQ, we can see that we have Class C bearish divergence on the 4-hour time frame. Okay, so you see how you have equal highs, but you have a higher high on NQ, right? And you can see that every single time we topped out, the RSI multi-length indicator flashed green. Right? Anytime we formed a short-term bottom, the indicator flashed red, and we see this exact same thing that we saw back here in February when we had this major correction. Okay, so I don't think it'll be a major correction this time. It may just be a minor correction. We'll see how it plays out as the price develops, but I would be expecting a move like the Dow back to the 21 and 50-day moving average. 21 days sitting at 22,240, and if you lose the 21 day, then we're going to come down to the 50-day over here at 21,368. Okay, this yellow line over here. And now something I also wanted to point out is that when you take a look at Nasdaq on the hourly, usually what you get in the futures market is you get these diamonds, right? This is a diamond top pattern, and usually what happens in the futures market is you actually have a fake out above the diamond. We had a gap in Shrap on July 3rd, and then we came down to fill that gap right over here. So we fill that gap, we may see a little bit of a push on higher. We may see a little bit of a push on higher and then top out from there, or we come right down to the 21-day moving average. But overall, the message is that the Nasdaq is getting a little bit overheated. Okay, as all of my indicators are showing that we are reaching into overbought territory. When we take a look at the S&P 500, we do see something very similar, right? Daily RSI reached into overbought territory, actually more overbought than we were back over here in February, okay, when we had this major correction. So we have higher highs, but we have a let me see here. So I'm not seeing any divergence yet. However, the indicator is moving into overbought territory. overbought territory is very noteworthy as it is, because we not only see it on the RSI, but we also see it on this multi-length indicator, and every single time it's flash green. Like I said, we formed a top right over here. I'll show you. Flash green over here, flash green in February, in December, right? Every single time. So the Bollinger Band width indicator is also very wide. It's actually pushed into this red region, and it didn't even really push into this red region back in January and February, but it did so over here in July. So similar to that of NQ and the Dow Jones, I would be expecting a move back down to the 21-day moving average, sitting at 6,078. Worst case scenario, we come down to the 50-day at 5,900. Now, taking a look at the DXY, I do think that the DXY has bottomed. We have actually reached the DXY targets that I laid out for my Discord members over 2 years ago. So we were calling all these moves on the DXY back and forth since 2022. Now, what we have over here is a 5-wave move down in September of 2022, and then we have what's called Wyckoff redistribution. So it's usually where the market redistributes, and we did so in the form of a 335 Elliott wave flat pattern. So you have a 3-wave move up in your A, 3-wave move down in your B, and then a 5-wave move to the upside in your C wave. And actually, when we were down here in around September, October of 2024, I was telling my Discord members we would come right up to this level in a 5-wave move, and then we would see the rejection back down for a continuation of this market structure. And we did just that. So now that we're down here below the range lows at 96 to 94, which were the targets that I laid out over 2 years ago as the bottom, we're starting to form bullish divergence. Taking a look over here on the daily time frame, from April to July, we have a higher low on the RSI, but a lower low on the price. And then from September of 2024 to July of 2025, we have a lower low but an equal low on the RSI. So that's called Class C bullish divergence. So we have bullish divergence on the high time frame. We've also tapped into the critical fib levels we outlined many years back. And we can see over here that on the hourly, we are trending up above all of the EMAs. So this does look impulsive. It doesn't look corrective. However, in the case that we do come back down to these lows, it likely would be short-lived, and we would just be coming down to around 95, 94. However, my point is that in this region is where I would be expecting the DXY to formulate a bottom, and then we would be going on for our next macro leg within this ascending channel that we've been in, going all the way back to the subprime crisis. Okay. Now taking a look here at let's take a look at the DXY here. So I'll take a look at the US oil. My apologies. Okay, let's take a look here. US oil. Okay, so now US oil is coming up to 68.33, making its way above the 21-day moving average. And I was actually telling my members that when we were down here, we were going to see a push up to around 63 to 69. And we perfectly got that. If you look over here, we can take a look at WTI crude oil. This was back in June 25th. Okay, we were back here. This was when the Iran and Israel conflict occurred. We had an ABC down to the 61.8% fib, and I did say I'd be expecting a push back towards the 50 and 38.2% fib. The 50 and 38.2% fib was sitting at 66.5 and 69. Okay, and look where we are now. We're right at 68.36. So everything is playing out perfectly on WTI crude oil. It does look like we're piercing through the 21-day moving average. DXY does look like it's hit my bottom target, and the DXY bottoming would likely coincide with a stock market top. And when we see US oil rallying at the same time, it's usually major warning signs in the economy. Now, taking a look over here, we can take a look at BTC over here. Okay, so this is BTC over here. Now, there's three scenarios that I have on BTC. We can't definitively say that it's bullish or bearish, because you have to remember Bitcoin is currently moving sideways. Okay. Now, taking a look here at the 4-hour time frame, the first scenario would suggest that the correction is finished here on June 22nd, but in order to confirm such a scenario in which the correction finished and for us to see a push towards 115,000, what we would need to see is, number one, a daily close above 109,064 at the 78.6% fib and 110,439 at the 88.6% fib. Once you get both of those things completed, then it's very likely that the bottom is in over here, and we're going to go towards 115,250. Around 115 to 125,000 is where I'd be expecting Bitcoin to go if we can get above these two levels. However, if we end up dropping back down below the 50% fib at 105,133, it would likely ignite bearish momentum, which would take Bitcoin back down to the 50% fib at 93,418 and the 200-day moving average at 96,514. Okay, so bearish momentum would be ignited if we end up dropping back below 105,000. Now, the third scenario would be a little bit more bearish. The third scenario would suggest that having multiple daily candle closures below the 200-day and having a daily close below 93 and having a couple daily closes below 93,418 would likely take Bitcoin back to the 50-week moving average, sitting at around 85,987. And Bitcoin is no stranger to the 50-week moving average. You guys can see over here how many times Bitcoin has used that 50-week moving average as a springboard. So let's just remove all of these drawings over here. You can see, so the 50-week moving average is this purple line right here. See, we used it back in April. We used it in September 24, August of 2024. We used it as a top right here in February of 2023. Used it as a bottom in 2021, even going all the way back to 2018, 2017. So Bitcoin coming back down to that 50-week moving average wouldn't be something out of the ordinary, but like I said, it would only be confirmed by a move below the 200-day moving average and 93,418. But so far, all eyes are on this level right here. Okay, 109,064 and 110,439. Once you get above those two levels, then the correction is in on June 22nd. Okay, and then we would be going towards our higher macro targets. Now, I know a lot of people are saying that this is a bull flag, retest, and it could definitely be that, but just remember that this trend lines are very subjective, so let's keep our eye on the triggers. And so far, the trend is going sideways. Okay, we've been going sideways since May of 2025, and we still are going sideways. Something I pointed out to my Discord members yesterday is on the Heikin-Ashi chart, I'm going to show you guys this. The Heikin-Ashi chart on the 12-hour time frame, yesterday it was red. Let's see here, 4-hour. Okay, yeah, the 4-hour is red as well. So usually when you get a red Heikin-Ashi, it usually confirms continued downside. Usually when you get a green Heikin-Ashi, it favors continued upside. And right now on the 4-hour, it's flipped red. Yesterday was red as well. We'll see how today closes. It closes in about 7 hours and 51 minutes. So there's no definitive moves that tell us that Bitcoin is trending up or down. It's actually trending sideways. Taking a look over here on the daily time frame, something interesting that I wanted to show you guys, and I showed you guys this in the last Bitcoin video. It's that when you take a fib right from the 2021 highs over here, I'll show you guys here. When you take a fib from this 2021 high down to this 2022 low, look where Bitcoin perfectly topped out at. Okay, I'm going to remove all of these irrelevant fibs so you guys can focus on what I'm trying to show you. And we'll take a look at this on the linear scale. Now, taking a look at this on the linear scale on the daily time frame, it does look like the blow off top has already occurred. As unpopular as that unpopular of an opinion as that may be, it's just what it looks like, right? It does look like we have 5 waves in here, and then the reason this 1.786 extension is so important is because that's usually where you see major market reversals. Taking a look at Bitcoin CME futures, we can see the exact same thing. Okay, we've perfectly hit the 1.786 extension. You see it right over here, and right when we hit it, that's when we started entering into consolidation. Okay, so just something to be mindful of. So we have US oil rallying back above the 21-day, DXY bottoming out above all of the hourly EMAs. Okay, and does look like the stock market is forming or putting in a potential top. And when we take a look at the CNBC Fear and Greed Index on the stock market, it has reached into extreme greed. Just wanted to point that out there. Now, we can also take a look at Bitcoin dominance. So now Bitcoin dominance, a lot of people have been calling for the top on Bitcoin dominance a little bit too premature, and I've done that as well. I think mostly every analyst has called a top on Bitcoin dominance too many times, a little bit too prematurely. But in order to avoid that, and in order to confirm that we're heading into alt season, what I would want to see is a red weekly Heikin-Ashi candle. Okay, I would want to see a red weekly Heikin-Ashi candle, and then I would want to see a red 3-day Heikin-Ashi candle. It's already red on the 3-day. Now I just want to see it red on the weekly. Okay, the weekly closes in about 5 days and 8 hours, and then so those are 2 steps in the criteria to consider an alt season, right? The third step would be a move below the 21-week EMA. Okay, so if Bitcoin dominance comes back to this 21-week EMA at 63.53%, gets a red weekly Heikin-Ashi, gets a red 3-day Heikin-Ashi, then we could say, oh, okay, yeah, we're headed into alt season. However, it doesn't look like the trend has shifted just yet. Okay, we have hit the 78.6% fib when you take a fib from this December high in 2020 down to this low in September 2022. However, let's not rule out the possibility of an extension towards the 88.6% fib at 69.76%. Another very great way to monitor if we're going to have alt season is just simply take a look at total 3 ES versus Bitcoin. And what we can see over here is we've been trending down for a little bit over 4.5 years. So we've been trending down since May 2021, and you can see that we're still bleeding out. All coins are still bleeding out to Bitcoin. Okay, taking a look here at the 4-hour time frame, you can see that we're still making lower highs. Okay, so our interim target on total 3 ES versus Bitcoin would be sitting at 0.2664. Break below this level, then we'd be taking a look at 0.252 and 0.221. Now this is exactly what I would want to be seeing in order to confirm an alt season. Okay, I'd want to be seeing something like this, like a V-shaped recovery like that. I'd want to see a V-shape recovery. So I'd want to see a pierce down into this region, right? And then I would want to see a V-shaped recovery out of it. Not like something like this. I'd want to see that V-shape. Okay. Now you can see over here how we had it back here in December 2020. See how we had this V-shape when alt started outperforming Bitcoin? Okay. And that's exactly what I would want to be seeing. So now it's likely that we're going to get this move over here And we're going to see Bitcoin dominance top out when we have more favorable monetary policy, likely when we start getting rate cuts in and around September. Now, crypto we've only seen Bitcoin and a few altcoins go up, like the ISO coins. However, for a true alt season to occur, where everything really blasts off, we would need to see more favorable monetary policy. And you have to remember that crypto is right at the end of the risk curve. So people are more likely to take that risk, to take that step forward to buy your altcoin when conditions are more favorable for them to do so, right? When we have lower rates. And my point is that we'll likely see Bitcoin dominance top out and total 3ES versus Bitcoin bottom out at the same time we get those rate cuts. Okay, that's what I'm thinking there in regards to the altcoins. But we're going to jump back to Bitcoin over here, and I just wanted to point out just the triggers. So here are the triggers, okay guys? If you get a daily close above 109,064 and 110,439, it would confirm that we're headed towards 112,000 and 115,000 and above. And it would also confirm that the correction is over. Getting a move back down below the 50% fib at 105,133 would ignite bearish momentum towards the 200-day moving average and macro 50% fib at 93,418. And then worst case scenario, like I said, would be a move back to the 50-week moving average. And we could definitely come back to that 50-week moving average. It would imply that this is you could say, mid-cycle correction or a major top, considering that Bitcoin has hit the 1.786 extension, right? When you take a fib all the way back from the 2021 high down to the 2022 low. Okay, so instead of jumping the gun, I just want to make you guys aware of the triggers and just be mindful of those triggers, because anything can happen going forward before we hit those upside targets. So yeah, this is the video. I just wanted to point out exactly what I see. If you guys love the content, then click the link in the description below to join the Discord, where you guys can get access to over 350 assets. You guys can ask me any question you want and connect with me one-on-one. Peace out and take it easy. I'll see you guys in the next one.